Welcome, everyone, and thank you for joining us wherever you're tuning in from. We deeply appreciate your presence and are thrilled to share this critical information with you today. It's wonderful to have you accompany us on this journey as we delve into Vietnam's current economic landscape, with a particular focus on the Vietnamese dong VND and US dollar USD exchange rate, especially as we look forward to 2024. Predictions suggest that Vietnam's production sector will gradually recover, leading to a modest increase in imports compared to exports. Nevertheless, this adjustment is expected to have minimal impact on the nation's overall economic balance, enabling Vietnam to maintain relative stability in its VND/USD exchange rate. This stability is attributed to Vietnam's effective use of regulatory mechanisms that keep its currency aligned with global market dynamics, even amidst external challenges. A significant factor under close watch is the role of the U.S. Federal Reserve Fed, which, according to experts, may continue maintaining high interest rates for an extended period due to various global uncertainties, including geopolitical tensions in the Red Sea. As 2024 approaches, these issues might persist in influencing global markets, including Vietnam's foreign exchange activities. Despite initial concerns about potential fluctuations, the VND/USD exchange rate seems to have reached a temporary equilibrium following speculation that the FED might refrain from further interest rate hikes. However, this stability could be fleeting, as sustained high FED interest rates may eventually trigger significant changes in exchange rates, potentially leading to what experts often term exchange rate fevers in domestic markets. The US dollar's recent global strength is a key driver of this dynamic. Investor expectations that the FED will not reduce interest rates soon have bolstered the dollar's value. By mid-December 2024, the dollar index DXY displayed an upward trend, reaching €1.1429 points, an increase of 0.24% compared to the previous month, reflecting enhanced demand for the US dollar. For Vietnam, this situation has intensified pressures on the Vietnamese dong. The State Bank of Vietnam SBV has pegged the central exchange rate at 25.38 VND per USD as of December 28, 2024. While this figure reflects relative stability, the unofficial market exchange rate surpassed 25.000 VND/USD for the first time since October 2024, demonstrating ongoing volatility. This rate remains notably higher than prior months, though there has been a slight subsequent decline. Many are now questioning how the VND will perform in early 2024. With concerns heightened by recent U.S. labor market indicators suggesting continued high FED interest rates, raising U.S. government bond yields, and strengthening the dollar further. As these trends persist, the resulting increase in the dollar's value makes acquiring it more costly for nations like Vietnam, adding to pressure on the VND. This situation is further exacerbated by the sustained performance of the dollar index above the 1,004-point mark, affecting various Asian currencies, including the VND. This scenario, while not indicative of economic instability, raises challenges for Vietnamese businesses and individuals reliant on foreign currency exchanges for trade and investment. Additionally, fluctuations in gold and foreign exchange markets, particularly in informal trading spaces, have fueled speculative activities and currency fever. These behaviors are primarily driven by speculation rather than fundamental economic shifts, prompting experts to caution against such risks, as they often lead to greater financial instability over time. Despite these challenges, Vietnam remains in a solid position to manage exchange rate volatility effectively, as long as the SBV maintains its prudent approach by controlling inflation and avoiding rapid reductions in deposit interest rates. Vietnam's macroeconomic stability is likely to endure. The SBV's deliberate policies have been pivotal in sustaining economic resilience, and there is substantial confidence that this strategy will continue through 2024. The critical takeaway for the coming year is that the VND/USD exchange rate will remain influenced by a complex mix of factors, including a robust US dollar and evolving global economic conditions. While navigating these pressures, Vietnam's economy is expected to demonstrate adaptability and strength, backed by its tools for inflation control and interest rate regulation. For everyone closely monitoring these developments, it is crucial to stay informed about shifts in both global and domestic markets, as exchange rate variations are part of broader systems interconnected with trade, investments, and fiscal policies. By understanding these factors, we can better prepare for future changes and make sound decisions. Thank you for dedicating your time and attention to exploring these insights with us today. Whether you're in Vietnam or elsewhere, your interest in this topic is invaluable. We hope this analysis has provided you with greater clarity on the VND/USD exchange rate and its implications as we move into 2024. Let's remain vigilant, informed, and optimistic as the year unfolds, offering opportunities for resilience and growth amidst challenges. Thank you once again for being with us, and may you stay safe and prepared for what lies ahead.